Greetings, Algo Artisans. Is Kaspa the Bitcoin killer?
It's alive! It's alive! It's alive!
Probably not. Yeah, Bitcoin's got a lot of great things going for it. However, we're going to do a little show today that I called Should I Invest in Kaspa Coin? And it's got live chart analysis for Kaspa. It's also Bitcoin, Ethereum, Solana. So let's get into it. And we're going to jump straight into the charts. Look at Kaspa. Kaspa was just over a cent last summer back in May, June, and it ran up to almost 20 cents, made up to 18.9 cents roughly. So basically 19 cents in mid-late February, just about a week ago. And so on the 21st, I made some forecasts. And one of the forecasts is not on the screen. I thought perhaps it might fall down to the 14 cent level, or the current forecast is as I drew it, as it literally followed the first and most likely scenario that I did. Now, I did add this forecast right here that I just pulled aside and put back. I added that today. I do think it could drop a level before it moves up. I think Kaspa needs to cool off just a little bit. But then again, maybe it won't. Bitcoin is running up. A lot of that momentum could easily be transferred over to Kaspa, and it could continue up. And if it does, for just some local targets, let's just say I was trading Kaspa and not buying and holding, and I am interested in buying and holding, I think I might even just take a risk on it based on the information I'm going to talk about today. But again, not investment advice. Do your own research. You can lose money in the market. These investments can all go to zero. Talk to a licensed investment advisor before risking your money on the markets. That said, I do think the next two levels up where Kaspa could make it are going to look like, say, 21 cents and 24 cents, right? This is based on Fibonacci extensions. And if you want to know how I do Fibonacci extensions or anything else on these charts, it's actually super easy to learn. If you're new to charting, there's a little bit of a learning curve. We can help you with that as well. We can direct you to the right sources. We can provide a lot of the basic information right in our online university, algofactory.tech. In the meantime, I do see this as those targets, okay? So I want to talk a little bit about the coin itself, the protocol, where it came from, and what it is. Now, basically, it's a payments coin, right? So it doesn't have any kind of other purpose, at least on its website, than payment. It's a proof of work protocol. Bitcoin is proof of work. Proof of work versus proof of stake is a pretty basic concept. Ethereum used to be proof of work. It moved over to proof of stake. Last year, proof of stake is supposed to be environmentally better. However, Kaspa is proof of work. And what that means is that there are several computers, in this case ASIC miners, that are decentralized and they are pushing the block through, right? They're decrypting the crypto. And this is supposed to be the most secure. I like it because it's more old school. Bitcoin is still proof of work. You can buy ASIC miners and mine Bitcoin, right? And Kaspa is also ASIC miner and decentralized and proof of work. Now, in this case though, what it says here, then we'll just go right here to about Kaspa, right? We'll go right off their website. It says, Kaspa is the fastest and most scalable instant confirmation transaction layer ever built on a proof of work engine. Transactions sent to miners can be included immediately in the ledger, which is structured as a revolutionary block DAG. Now, we're going to not get too far into this because it gets a little technical, and that's not where we need to be for this video, but it does say that it is based on the Ghost DAG Phantom protocol. And the author of this protocol, his name is Shai Wyborski. He's a grad student who's working on algorithms. He met some of the early devs and went ahead and got involved, and they created this Ghost DAG protocol and implemented it. And what he's saying is that this is the only large proof of work that is completely community driven. There's no ICO, no fundraising. It was created and released into the wild. It implements a proof of work protocol which fully solves and fully scales the Trilemma, and we're going to talk about the Trilemma here in just a moment. And he says that it increases throughput immensely without sharding or other solutions, and he says that it's in one state, right? It doesn't have to go into sharding. It doesn't have to be like, it doesn't need a level 2 type solution to be fast, to be scalable. It's one state and it grows fast, and you can still scale down confirmation times, which actually is a big thing of proof of work. He says that it's the first time that has been effectively done in history with a proof of work blockchain protocol. We do want to take a look at the tokenomics, but let's define the trilemma first, right? What do they mean by solving the trilemma? Well, there's an article here on the block that talks about what is the blockchain trilemma. That's what it's called. Blockchain tech has revolutionized the way we conduct transactions and store data, and the trilemma was coined by Vitalik Buterin, who is the Ethereum founder, and it's a trade-off between the three critical aspects of blockchain tech: security, scalability, and decentralization. For example, example, when you scale out, you can lose security, right? If you try to do too many transactions at once, a lot of times changing your protocol, especially with proof of work, that's going to sacrifice security, right? Now, decentralization can actually, in a way, cause scalability to slow down because you are not operating all under the same roof, and it can affect security, but in another sense, it actually is positive for security, right? That's why the Bitcoin blockchain is secure. It's because it's decentralized. Of course, with security, the more security you have, that can affect scalability because you cannot scale out because you have to keep the protocol effectively simple with as few attack faces as possible. An attack face is a terminology that's used by programmers and hackers, and this is where a lot of computer protocols get exploited. It's the cracks in the shield called attack faces. So we're going to look at CoinMarketCap to take a brief look at the tokenomics for Kaspa, and I actually dug a little bit into the tokenomics today. There's a really good video, link is in the description, and it's by Coin Insider, and he has an entire rubric, if you will, and you can purchase it for very inexpensive. Go to that. We're just going to gloss over that stuff. I don't want to steal this thunder, so go take a look at his video. But you can see here the market cap is $3.8 billion for Kaspa. The volume itself is 60, and that's about 1.63% of the whole market cap. The circulating supply is 80% of Kaspa, and that's going to go into how we think of this coin. And it says the fully diluted market cap is $4.8 billion. So the maximum supply is 28.7 million. And this has to do with some things we're going to talk about in the future. Kaspa has kind of a similar emission protocol as Bitcoin, right? So Bitcoin is created when miners mine new Bitcoin, and miners who mine new Bitcoin are paid with the creation of new Bitcoin. It's called rewards. So every time somebody solves the cryptographic equation that completes a Bitcoin transaction, puts it on the blockchain, those miners are given a small reward in newly minted Bitcoin, and that is how Bitcoin is created. Every 4 years, those rewards are cut in half, right? So what happens is that as those rewards are cut in half, that means half the amount of new Bitcoin is entering the market. And that creates an artificial scarcity. And I think the last Bitcoin is going to be mined in like 2040 or something like that. As these halvings continue to occur, the amount of new Bitcoin created is being cut in half, and the inflow of Bitcoin decreases. Now, there's a bit of an argument as to whether or not Kaspa is inflationary. I would say long-term it's deflationary, short-term it's inflationary, and it's kind of for the same reason as Bitcoin, right? The actual protocol may not be as simple as the Bitcoin halving type protocol, or it may be as simple. I did not dig that far into it, but I did rely on the following article here, and it's right from Kaspa, and it says Kaspa is in deflationary. It's both. When you mine, more is created. That means more is created, so that is inflationary, right? The mint rate actually is where we start to see a deflationary case come in, and I'm going to read that. It says here, the mining rewards are programmed to decrease over time. As a result, the inflation rate diminishes over time and will continue to do so. New Kaspa is being added to the circulating supply. However, the minting rate is reduced with every halving. As opposed to traditional fiat currencies, which are subject to continuous inflation, if we consider this trend of diminishing inflation, from this moment, the mint rate of circulating supply is deflationary, right? So in my opinion, this is much more deflationary. So back to the tokenomics here. I'm going to just briefly go over some of Coinsider's points here. I want you to go take a look at his video. I'm also going to put the profile for Shai Wyborski, so on his Twitter profile. So you can go take a look at him and what he has to say. Of course, really, really interesting cast, but you want to go look into the background. The tokenomics are just one consideration. You have community, you have technology, you have the roadmap and the team. And I think the biggest thing I'm looking at is the community besides tokenomics, right? And besides the tech is the community. And the reason is that this was never ICO'd. It was never funded by seed rounds. I mean, that's just what the author has said. I have no reason not to believe him. If somebody finds out that there was an ICO or something, let me know. But in the meantime, I don't think anybody is disputing that, right? And they just released this thing into the wild, man. They just made it. Here you go. And the community has pushed it, which is really unique in this day and age. Coin Insider goes over some basic stuff in his rubric, and I'm just going to gloss over it very briefly before we move on to some other charts, okay? So we have token necessity. It's the token is necessary to access the protocol 100%. Obviously, with the mining, it's proof of work, which is robust. It's competitive. And now the competition of the mining is what makes it not that attractive to mine, because the rewards are not that great, but the fact that it's such a stable model is what's going to make it great to mine, because as you mine it, those coins will increase over time in value. Now, of course, there are those who feel that shouldn't be included in a mining metric, because you could just mine something and sell it. So, there is that concept as well. That's starting to become a little bit of a subjective argument between miners. I am not a miner. It does not matter to me. Now, a lot of the coins are in circulation. We talked about that already. As you can see it right here, it's actually 79.56%. So with the coins in circulation, and also no vesting schedule, no unlocks, there isn't some whale who's going to unlock his coins in 2 years and dump on the market, right? So, there is that. And the distribution of the coins also, it says 40 to 20% held on the top 100 holders outside of exchange addresses, which is kind of decent. It's not too good, not too bad. I said 40 to 20%. I think I meant 10 to 20%. Go to that video, check it out, just to be sure on that. The economic incentive, mining rewards are less than average, but again, it's a stable mechanism, so people might not be afraid to mine it because they'll be able to continue to mine it and not have to change their protocols. The transaction fees do not go back into the ecosystem, which with some protocols they do, so that's not as attractive, but it's not a big deal. It doesn't really have any kind of capital allocated project development, right? So all the money is made goes to the miners basically. However, there is a crowd-funded ecosystem growth fund. So that's kind of a good thing, kind of a not good thing, if you will. It's not automatically funded, but the community pushes it. And because this is such a huge community coin, I think that's actually pretty decent. It's pretty accessible on exchanges. Now, here we are with pumps and dump manipulation. That's the last thing that Coin Insider, I have a hard time saying that, Coinsider looked at. And the way you look at that is just by looking at the charts. And I can tell you right now, I don't see a lot of P&D going on. You have some funky wicks, but that could just be the market. This looks like a pretty healthy coin if you look at it. Very naturally moving. I don't see big giant wicks going into the sky, coming back down. I don't see, like, a pump and dump kind of looks like this. Flat, big pump up, big pump back down, flat, pumps up. Lots and lots of that. That's P&D, and I don't see that. I see a lot of very natural price action looking. So all in all, I like Kaspa. I think it's great. Brief look at Bitcoin before we go. Bitcoin, Ethereum, and Solana. Okay, so Bitcoin itself, broke out and it's headed up. It is rejecting right off of 57,600. So I do expect right now price to possibly stay where it is for at least a few days. For it to move up this far, this fast, at least 2 or 3 days it might stay there, and even longer. But I do expect price to at least be stable for a short time. This larger jump is probably the last like $5,000-$6,000 jump within a few days that we're going to see for at least like a week or two. I think it's going to stabilize somewhere. It may stabilize a little lower or higher than where it is right now. As time goes on, we might be able to get some clues in the charts as to what's going to happen next, right? So Ethereum is actually pretty hot, and I have been actively predicting and successfully predicting Ethereum. And as you can see, here is a trade, and I mapped this out 4 or 5 days ago. And even before that, if you watch my videos, I have predicted this price movement for weeks now, right? I've been calling this out, how it would happen since before it even broke its prior high. I've called this out. Go watch prior videos, pat myself on the back. That's how it is. I expect 3,400 to be a nice target. It might go beyond that, but if I were in a trade, it would look like this, and I would be out at 3,400 and re-examine. And the last coin of the day will be Solana. Solana, I was thinking, would probably start to move back up as Bitcoin moves back up. Now, if Bitcoin breaks above, say, 60,000 and really starts to chase that all-time high, we actually might see money flow away from alts into Bitcoin or not. That's actually a little bit, that's making this a little unpredictable, but this is a trade that I mapped out as a decent trade based on Bitcoin being bullish and staying bullish. So the risk here, of course, would be that Bitcoin maybe has a hard time, falls really hard, and drags everything else down with it. But otherwise, I see this as a decent trade with Solana and a target up at about 144. Okay, so that's all we have time for today. In fact, we went a little bit longer than we usually do. So come on over, check us out, trade your job, upgrade your life. See you on the next one.